What's up, everybody? Hope you're having a great weekend. In today's weekly prep video that I do every Sunday, we're going to be talking about the markets. We're going to be going over the QQQ, the SPY. We'll go over a little bit of the IWM and TLT. But if you missed it, I just dropped a huge deep dive analysis, video analysis on the IWM, TLT, and where I think they're both going into this week and for the rest of the year. So if you missed that, just check on my page and it's on there. But we're also going to be getting into some of the watch list. Not too much though, as none of these trades are fully set up yet and ready for entry. They're still just high five setups and on a watch list, but they're not ready to be entered yet. So we probably won't go into those too much. And then we'll cap off this video by talking about all our current trades that we're in right now and where they're all at and where I think they're all going, very briefly and quick. But first, I wanted to get into this week. This is a very, very big week. This is the week before what is the so-called Santa Claus Rally. The Santa Claus Rally runs from the 23rd through uh, basically the basically beginning of the new year, the first week of January. So that is the quote unquote Santa Claus Rally. So we are a week out from the Santa Claus Rally. And this week is a very large week because we are jam packed full of economic news that's coming out so let's go through it real quick. On Monday, we have manufacturing index coming out. We have global composite and manufacturing PMI. Um, some of these things are more important than others, so I'm just going to highlight the key topics and key items for this week. We have retail sales, X autos month over month, X gas month over month, retail sales month over month shows us how the consumer's doing. We're pegged for a 10 basis point hike, meaning that the consumer's in a really good place here in America, and that the consumer's strong into the holiday season and they're going to continue to spend, and the economy is looking good on that front. Industrial production month over month, industrial production year over year. Those are some other key highlights here for Tuesday, December 17th. If we scroll down here, Wednesday, we have some mortgage market um, index refinance information that's coming out, mortgage rates for 30-year. Some good data to kind of give us a pulse on where the housing market is at. Building permits also really key for seeing if we're getting a lot of new building going on, if we're getting a lot more houses being built. What I like about TradingView, it tells you right here, these three bars, it tells you how important this is. So if you were to click this, look at that. Now everything I'm pointing out here shows you the most important um, items for the week. And if you didn't know this calendar was even here on TradingView, you're welcome. I just gave you a new thing to drink your coffee to or prepare for the week ahead. If you're a TradingView member like I am, this is just another little tool that you can add to your toolbox. I really enjoy this and looking at it, and I'm definitely going to start adding it to my videos going forward. So um, yeah, if we just click this, we can really just break it down. I wanted to add a couple of those other things in the beginning of the week before we broke it down into the more important things going into the second half of the week, honestly. So, like I said, retail sales month over month, building permits, and then obviously on Wednesday, we have this massive Fed interest rate decision. It is like 85+% chance, 90+% chance that we will get that 25 basis point cut. But there are talks that the Fed will have a hawkish cut, not a dovish cut. A dovish cut is basically the words that are spewed out of this man's mouth are all rosy. A hawkish cut, at the simplest of terms, are he's cutting, but he's going to put some fear, uncertainty, and doubt about continuing to cut in the future, which I believe he will continue to cut into the future, and this will continue to come down as we go, especially into 2025. But I believe he's going to put there's talks of him having um, words that come out of his mouth that are hawkish, that are going to put fear, uncertainty, and doubt into this market and could cause some volatility on Wednesday into week end. I do believe any kind of volatility or any type of pullback caused by this hawkish uh, talk is a buy, in my opinion, in this market. From what I'm seeing in the charts that I'll show you, I do not see any sort of crash imminent. I was calling for a pullback. We got that pullback, but what I'll show you here in a minute, I think we could get a little bit more of a pullback, and this could be the perfect little catalyst to give us that before the Santa Claus rally into the week after. So we have the Fed talking at 2:30 Eastern Standard Time on Wednesday, obviously after their decision. We have Thursday, we have GDP growth rate quarter over quarter, expected to go down from from the prior quarter. And then we have core PCE price index, personal income month over month, and personal spending month over month. Um, Personal spending expected to go up, meaning the consumer's in a great place. Personal income and core price index both going down, um, which obviously personal income going down is not necessarily what we want, but this is month over month, and obviously month over month is not year over year, and year over year, just like a weekly chart is more defined, than month over month is more like a daily chart and less defined. So more swings in these types of numbers. So yeah, so that's the week ahead. So let's jump into some charts and technical analysis. So first up, we're going to talk about the QQQ, as we always do every Sunday. So the QQQ, as we were calling the week before, we had this pullback in the beginning of the week down to 519, which was our second level for a pullback. Well, actually, sorry, our first level. This other yellow line was actually just a where we were at the all-time highs. Our first level was right around 519. We had a pullback basically right at 519 before we had a bounce and a continuation higher. Now the issue with this bounce, and I wish we would have just had this pullback and stayed down here on the week right here at 519, because we were down here on the Williams R percentage. We were down to this other dot, and here on the trend line, right? So this trend line runs high. We hit 3 times, and this would have been a fourth hit, and it would have peeled us back off of this barrier, this red barrier line, which, as you can see, every time we hit it, we have a pullback or consolidation before we continue sideways. So basically, if you're new here, the Williams R percentage is a indicator that I use, and I believe every trader should use and have in their toolbox, because it is a very strong indicator for predicting markets, for predicting the stocks that you are in and where they will go, even cryptos, where they will be believed to go, and give you the highest probability of predicting that. What I've added in my personal strategy with the Williams R percentage is called the Williams consolidation box. And what the Williams consolidation box is exactly what it sounds like. A Williams consolidation box is basically coming up here, hitting the barrier, pulling back, creating some sort of support. So we have a pullback here and a pullback here. That is support, right? Just like on a line chart, when a stock runs up and then comes back, that is creating support. And then it continues higher, and then it typically comes back to here to make this prior resistance, flip it into support, and continue higher. Previous resistance needs to be broken and then retested before it can be considered support. Resistance turned into support needs to be broken, retested, confirmed, and then continue higher to be confirmed as it flipping from resistance to support. Okay, I repeated myself a lot there. I really wanted to be fluid and get you to understand that. So there's no difference in that on a line chart than the QQQ and the Williams R percentage and the Williams consolidation box. And essentially, what you want to see in these boxes is you want to run up, a pullback, create support, and then not break that support until you are ready for a bigger pullback. So We saw it here. Once we broke this support, what do we have? We had a pullback. So right now, we are sitting pretty in this beautiful Williams consolidation box. We made support here. We confirmed support here. We're bouncing back and forth off support and off the barrier, the red barrier, in which we, if you zoom out, have not gone above for all these years and decades. And as long as we stay within this Williams consolidation box, I coined the phrase, then we will continue higher until the time that we break this Williams consolidation box and subsequently have our high five indicator go red, as we've seen in the past. Until that time, this bull market is not over, and the QQQ run will continue higher. The SPY and the IWM will all continue higher because all of their Williams consolidation boxes are still intact, and we're still going higher. So, like I said, we did get this pullback, and we were down here to the trend line, but we did not hold that, which leads me to believe that we have the Santa Claus Rally in 2 weeks coming up. Doesn't mean it's going to happen, but we have that coming up, and we're up here still at this barrier. We need some sort of a pullback. And what we might be able to do or get away with is some sort of lull this week on the daily, building just basically a doji candle on the weekly, have a lull period until Wednesday when we get the Fed rate decision. And once we get that Fed rate decision, then we get some volatility. We get a spike down to 519 or our second level down to 514-ish. And with that, we either end the week red there or we get enough pullback down here and then maybe wick back up to 519. And that, my friends, will be enough to keep us on this support line, but give us that pullback and a pullback off the barrier that we need to create some room for us to go back up to that, to go back up to highs, and then continue sideways in this, right? Because as you can see, when we get this pullback, we usually get, a weekly red candle. Get this pullback, we get consolidation, a weekly red candle. Get this pullback, we get a big pullback. If we break out of the box and go down to the bottom, right? So I think I spent enough time on that. So I called for a pullback last week. We got to our level 1, then we bounced back to all-time highs. I'm calling for either consolidation and a bit or a bit of a pullback this week, to kind of give us that little bit of breath so we can have the Santa Claus Rally, everybody. The SPY is no different. The SPY looks a lot better than the QQQ though, because as you can see with the QQQ, we ended with a nice green candle and an all-time highs. On the QQQ, we did not end with a green candle. We ended with a red candle and not at all-time highs. We had this pullback. I said we'd have a pullback to 600. We got to 602.13. Very close, but it did the job. You see, it did the job. We pulled back to this trend line. We gave ourselves some room from this red barrier, and now we can continue higher, or we can consolidate this week, which will bring this down even more, closer to the bottom of the box or closer like to right on the line or right with it. And then we can have the Santa Claus Rally with a big year end into first week of January, before we get probably another pullback with everybody, with a lot of people, a lot of hedge funds selling out of some of their positions now that the tax season is over, and now they can have like a year and a half with delayed taxes, a year and a half of basically not having to pay tax on that money and making money moves with that to essentially create more wealth. And if you can avoid paying taxes as long as possible, obviously in the most legal, in a legal way, then that's even better for you to be able to make more money moves and create more wealth for yourself and your family. So SPY, same thing. Oh yeah, the QQQ. We do have this ascending triangle breakout that we had. It is a pegged $580 price target that's the measured move from this ascending triangle pattern, and its time frame is March 3rd, 2025. So we should, based on the measured move and the time frame, be at $580 on the QQQ on March 3rd, 2025 or before. And with the measured moves and how they work and my strategy and how it works, I strongly believe this will come to fruition. And our first price target is actually 560 that we have as well. So 560, then 580 before March 3rd, 2025. It's how I see it, how I have it cut. We'll see what happens. But moving to the IWM, I'm not going to speak on this anymore. Like I said, go check out my IWM and TLT full analysis breakdown video that I dropped on here, TradingView, and also other medias. Go check it out. It's very in depth, very analytical, and I think it has a bunch of gems. And if you're trying to learn about the stock market, I think it's really good a learning video as well. But another thing I wanted to pull up real quick when we're talking about the markets here, and then we'll move on to the high five trades that we're in and where they're at. Look at history. Like I always love to look back at history to really understand things at a high level, to understand where we are going, to understand just the overall like breadth of the market and what's happening, right? When in doubt, zoom out. It's a saying for a reason. So we had this crash back in 2020, this flash crash in 2020 due to COVID. What happened here with all the QQQ, the SPY, and the IWM? QQQ, obviously, as you can see, is purple. Pink. The SPY is purple, and then the IWM, the Russell 2000, is blue. What do you see in 2020? What do you see in the down year of 2023? What do you see? You see that they all come together. They all come together. Right? Not stacked on top of each other, but they get very, very tight when we have these pullbacks, right? We have these pullbacks, consolidations, and then breakouts, and then pullbacks, consolidations, breakouts. That's how these things work, right? So we have these tight areas where they all come together, and we have these very, very, very spread out areas. And this is another reason that my gut, and just by looking at this, tells me that in the first quarter of 2025, we are going to have some sort of major crash or pullback of 15% plus to get these in line to be able to consolidate for the next move higher. And what we've seen over the last 5 years is that these moves happen. The consolidation periods are very short. COVID was like a couple months. 2023 was 1 year. Typically, bear markets last for years. But I hate to say it's different this time. We could be seeing with technology and the flow of information that these things happen a lot quicker than they have in the past. But we will not know this for decades to come, and until we can look back at history, like we're looking back at history now, to understand if that was right or wrong. Okay. So one other thing I want to bring up, and I brought this up in a comment to somebody because they said, well, Ronnie, we already ran so much in the IWM. We've already ran so much in the Russell 2000. And I simply commented this chart with a little write-up saying, okay, well, we had this consolidation, this come together of all the indices, right? But before we had these, what did we see? Well, we saw that the Russell was very far away from your SPY and your QQQ. And before we had these pull togethers, right, these consolidations, we had the Russell make a big run to catch up to at least the SPY. Sometimes it catches up to the QQQ. Sometimes it only catches up to the SPY. So in 2020 to 2021 and to 2022, what did we see? Right there. The the Russell 2000, the IWM, caught up with S&P 500 or SPY. It made a 13,701 bar move, 143% from this bottom. And then after, because how these things work, how these bull markets work, is that the SPY and the SPY and the QQQ run, and the IWM usually lags behind, but eventually it has a parabolic move. It catches up, gets closer to the SPY and the QQQ before the market crash or pullback. The Russell 2000 and the small caps are typically last to run in a bull market. They typically catch up at the end, and then that signals a once those get like pretty frothy on their valuations, that signals a top and typically a big crash or pullback in the markets, right? So I simply said to this person, I said, look right here. After I just gave you a history lesson, look right here and you tell me that this 46% run in the IWM since the end of October, you tell me that this is all the IWM in the Russell 2000 is going to run. It could be, because either you get a big catch up in the Russell 2000 or you get big pullbacks in the SPY to catch up and consolidate with the Russell 2000. But here's what you have to understand is when these things happen, these run-ups happen here and they catch up, right? In order for them to pull back and come close, they have to pull back hard, one, but they also have to get met halfway. And so even if these are going to pull back big, this is going to pull back with it. So before that happens, they have to get a little bit closer, at least that way when they do pull back, the measured isn't that the measured area is at least closer, right? So let's say it's there. We have to catch up here before they go here. That way it's these measured areas from each other aren't like crazy like they are right now. Look how widespread these are. These are so widespread from where the Russell's at. And as such, you cannot sit here and look at this and tell me that the Russell simply is the bull run in the Russell and we have reached our end of the bull market because the Russell and the small caps are so overvalued and they've ran so much. Have they? And also, one of the best analysts on Wall Street, Tom Lee, what was he saying about Russell 2000 in small caps? He said 60% plus move. We're only at 46% from the bottoms that he was calling, and he was even calling 60% here at higher levels. So, and then the copy pasted 13,701 over here puts us at, you know, it puts this is all percentages, sorry guys, but it puts us up here, right? Closer. Actually, I can change this. Where's it at? There we go. Look at that. Puts us at around $298, right? The measured move. You want me to blow your mind a little bit? Let's look at the measured move. Oh, look at that. Our measured move from this massive cup and stupid thing. This measured move from this massive cup and handle is what? $306 on the IWM. Oh, wait, what did I just show you? Oh, wait, that's right. The measured move from history from back to 2020 and 2021 at its peak, 13,701 bars. 13,701 bars. That literally takes us right around 300. And our measured move is 306. So you sit here and you tell me that we are done running in the Russell 2000. You tell me this bull market's over. You sit here and logically tell me with the facts that I've given you that this is over and that we are not about to run up to 300. I digress. Go check out my full analysis on IWM TLT. I didn't include that part, so that's a free gem on this video, but it's a very good gem in my opinion. So always be zooming out, always be looking at history. It is the best. It's the best to look at history on these things because it will really show you where we are going. And newsflash, February 24th, 2025 is the measured move on this ascending triangle, and that puts us at 259. So big 10-11% move before February or March on the IWM. That's a 259, if not even higher, up to 306 in 2025. So I believe 2025 small caps, value plays, and dividends are going to be the high flyers for that year. But I digress again. Um, you know what? It's already been 25 minutes. Let's quickly go over these and then we'll get to what we can get to. I'm just gonna quickly go over them. Pan W, great trade, still a good trade to get into, possibly if you're looking for a trade. Not financial advice. Williams consolidation box is thriving. Um, Consolidating right over the ascending triangle breakout, measured move at the 503, still good to go. Fubo, it didn't get to the Williams consolidation box. That's sad. But I said I would give this name this week. We were right on this volume shelf here. We were right on this volume shelf here. We were right at this trend line from all the way back here in end of 2023. Yes, we've had a fake out and we were back in the symmetrical triangle pattern and the ascending triangle pattern. Yes, but here's the thing. Boycott on YouTube TV because more price hikes, I believe, is a good thing for this name. It got beat up last week because it was a sympathy play to the downside with Google because Fubo is number 2 in this space. But here's what I think. Okay. Retail thinks more logically and faster than Wall Street because we are controlling our own money instead of other people's money. And as such, we can make assumptions and conclusions a lot faster than Wall Street. And as such, I made the conclusion that this boycott, this rage against YouTube TV and Google is good for Fubo because this will drive this will drive market share in their direction and putting the ball in their court for people to flock to Fubo TV and their services because it is cheaper than YouTube TV and people are outraged. And like I said in a comment to somebody else, this younger generation would rather go to the small mom and pop cafe or whoever. They rather go to the small time local cafe than they rather go to Starbucks. They rather go to the local bookstore than they rather go and order the same book off Amazon. Fubo is the local cafe, local bookstore. Google is the mammoth Goliath mega cap company that the younger generation feel that, you know, they're not fond of them. They're not fond of them. That's just how they think and how they are. So yeah, I think in the year end, Fubo has a giant move. Not financial advice. Do not get into this name unless you're ready for a wild ride. It's a sub $2 billion market cap. But I like it as an investment. Not invested in it, but I like it as an investment, and I'm okay holding this trade as a trade due to liking it as an investment, but not being invested in it. Hopefully, I know that's confusing, but yeah, I'm gonna give it this week. I'm gonna see what it does. I'm going against the strategy a little bit. Well, no, because it's still green. It's just like I didn't get into it at the right time up here and everything like that. But live and you learn. It's all good. It happens. Mistakes are made. But I'm gonna ride this thing out for a little bit because I think through other technical analysis and fundamental analysis, I think I'm gonna be right on this name as well. NVTS, we broke out. We had this pullback right at the level 1, $3.50 is where we're holding. We could bounce here. And again, these few right here, Fubo, NVTS, Hitty, these are all small caps. And I just told you that I believe we're going to have a big bounce on the IWM. And yeah, I believe we're going to have a big bounce on the IWM, guys. And that means that these small caps are going to run. So when I say 350 is the level due to previous support and now flipping this prior resistance into support, I think if we run in the IWM like I think we will, it's going to push Fubo, NVTS, and Hitty, these other small caps, a lot higher. So I believe this could be the pullback. If we do get more of a pullback, our second level is $2.90, and that would be the actual retest of the falling wedge breakout. And also, look, we're creating our Williams consolidation box. and we are also still here at the volume shelf. So love this name. Lots of room to the upside. Think everything's looking good, and I'm not worried about this name at all. Mobileye, nothing has changed with this name. I dropped another video. I've been dropping a lot of videos this week. I dropped a separate video about my whole fundamental and technical analysis on this. The daily has a beautiful cup and handle pattern. I think we're going to be seeing a 2 handle in front of this name very, very soon. Definitely before end of year is my prediction. I could be wrong, but I don't think I am. We are very close to a cup and handle breakout on the daily. This name is going to have a parabolic move. It's going to have that gap up pre-market while everybody's sleeping, and people are going to be like, why did I not buy more of this? Because the gap up's going to happen because of, I predict some news of them scoring a deal with Honda is my prediction before the end of year. I think they're going to announce that, and that's going to cause a huge gap up. Because the thing that nobody talks about this with this company on the fundamental standpoint is they have this technology that can fit from they have this technology from level 1 autonomy all the way up to level 1 ADS, ADAS, where it's lane assist, all the way up to level 5 full autonomy, and they have eyes on autonomy as well, like level 3. So the thing no one talks about is that Tesla has their own vehicles and their own technology to do full self-driving. Waymo has their own technology and their own vehicles to do full self-driving. Or they have vehicles that they got and they fitted those specific vehicles. Mobileye is the only company that has level 1 to level 5 level 1 to level 5 autonomy that could fit any automaker with their technology like a glove. That is why I'm so bullish about this company. So bullish about this company. And again, check out my detailed analysis. And I'm not going to go into all the charts and everything, but check out my detailed analysis if you really want to know where it's going and my price targets and everything. But the reason I'm so bullish on this isn't just because of the 22+% short float, isn't just because of what the charts and technical analysis are telling me, isn't just because my high five investing strategy spreadsheet tells me this name should be 30 some dollars plus, isn't because China's coming out of a recession and stimulating its economy, isn't because interest rates are falling like a rock and that's good for automakers, legacy automakers, and obviously Mobileye because they work with them, isn't because inflation has fallen like a rock and is dead. My biggest bull thesis on this company is because they have the technology that can fit all the non-Tesla players like a glove with their technology. Honda, come on over. We'll put our technology. Look at that. Full self-driving. Nissan, come on over. Put our technology on your stuff. Full self-driving. Having these massive deals that are going to go into place. And once they get a Honda or a big name, I'm telling you, things are going to change because they're going to see the work they're doing. Mobileye is going to be able to show these other legacy car brands what they're working on with a Honda or something, how they're fitting their vehicles with their level 1 to level 5 autonomy, and they're going to start flocking to Mobileye. I believe it's going to be too difficult. Tesla will have to be too spread thin to be able to do fit other car brands and all this stuff with their technology. I really do, guys. I think Mobileye is going to be the Android of this space, while Tesla is going to be the Apple of this space, with these multi-trillion-dollar total addressable market. And that's my biggest thesis, is that they're just gonna have this great technology, and they're just gonna start fitting other car brands, whether it's electric cars or whether it's legacy car brands, and then they become electric car makers. Whatever, gas is still gonna linger. Gas powered vehicles are still gonna linger, but that's my bull thesis, guys. We are going to have fully autonomous vehicles all over the road before the next decade ends. I'm telling you. And Mobileye is going to be fitting a lot of these brands with their technology because they aren't going to be able to get it anywhere else. And there's no other really big players. It's Waymo, Tesla, Mobileye. That's it. And Waymo is really focused only on LiDARs, and it's super expensive. So Mobileye has that cheap option for these legacy car brands. So you're welcome for that gem. And you invest in this company if you want to, but I'm telling you, this is most likely going to be a 10x for me. I believe they're going to go to $100 billion market cap over the next decade or two. So yeah, that's there you go. There you have it. Continuing on, D-Lo, it's hitting the barrier on the Williams consolidation box, and the Williams R percentage needs to pull back down here, create the Williams consolidation box, which I believe will bring us to a pullback down to the falling wedge breakout point, and then I believe we bounce higher and continue to our profit target to 1726 and 24. Hitty, high tide, very small cap. It's like 257 million. So be very careful with this one. If you choose to trade it through your own financial measures, there's not financial advice again. If you choose to trade it, that's on you. I'm trading it. I said, here's our resistance here. Our resistance needs to be retested to turn into support. We bounce right off that $3.12. And now I believe, along with the IWM and Russell 2000 and small caps, I believe we're going to continue higher on this name. I believe these marijuana companies and stocks are going to catch a bid again. All it takes is new president to say one thing about possibly legalizing it. And not only is this name good on the fundamental side that I'm invested in it for, but on the trade side, breaking out of a cup and handle. Beautiful Williams consolidation box, thriving, launching off a volume shelf. What more do you want? With a measured move up to $4.95. And I'll hold it until everything goes against me, and then I'll sell for the gain after I take my one third profits here. So actually, 1/4, holding 1/4 for investment, selling the other 1/4 once it goes against me. So AI, man, we shot called this name so well this week. I already made a post about it, but we bottom called it here in our dip buy box at 35 up to 39. It keeps hitting off of 35, and in 3 weeks in a row, it had this massive wick off 35, which is very, very bullish when you're talking about weekly candles and you're wicking off the same support of 35 3 weeks in a row. Very, very bullish. It's been very volatile, but man, if you're in this name, I'm in this name, we're about to get paid on this name. They crushed earnings. They crushed it, 63% beat, almost 4% beat. They have this massive, massive partnership with Microsoft. What more can you want? The Williams consolidation box thriving. We have this falling wedge pattern that we broke out of. We retested. We launched off of it. We have a measured move up to $58. We have we're sitting right here at the launch pad at 40. Think we go to 49, then 58. 49 is going to be before end of year target, and then 58 will be sometime next year, maybe first quarter of next year. I think we get there as well. I think this name's going to move like SoundHound AI moved, and I'm not going to get shaken out by these earnings and these crazy moves that they're doing. I think they're just shooting the stock down to be a buyer down here. These downgrades and all this crap, they're shooting the stock down here, being a buyer like we saw with SoFi, like we saw with HIMS, like we saw with SoundHound AI. And what do we see? On earnings, they had great earnings. They shot the price down. They were buying in, and then they let the rubber band go, and it snapped to the upside on all of them. Go back at all my analysis on all of them. I bottom called those two. I'm telling you, this one's about to move big. If you're not in this name, I would be hesitant to get in it unless we have another pullback to 35, honestly. Not financial advice. But at this point, I think we're going to move big this week. Yeah, it's a mid cap, 5 billion. Everything's looking great. HIMS, I made a detailed analysis on this one too. Go check it out. We're forming our support on our Williams consolidation box, but go check out the full in-depth analysis. We're breaking out of this cup and handle pattern. We have a measured move up to 48.55 still. Intrinsic value and fair value on a fundamental side that I'm in this name fundamentally as well for an investment. It's $40 per share. Looking great. You just got to be careful. I said we run up 35, pull back to 30, run up to 40, pull back to 35 before we run up to 48. The reason you got to be careful is in that video I said on the 16th, Monday, tomorrow, this name has that drug, the one of the GLPs is going to be either kept on the shortage list or removed from the shortage list. If it's removed from the shortage list, this name's going to tank down to 25, maybe even 23. Um, but I think it holds the cup and handle pattern retest, so 23-ish to 26-ish. I think it holds the pattern. If it is maintained on the list, then I believe we shoot up to 40 quick and then pull back to 35 and then we shoot up to 48. So I think this name has a lot to run. I think it's lagged, Hood and SoFi and all those because all the FUD around it, the Amazon news, the short attack a couple weeks ago that I called that dragged it back down to 19. I bought in. And here's the thing, I'm an investor of this company. I have some shares that I'm trading as well. If we get a pullback down to 23 to 26, I love it. I'll be buying more before we continue higher. This company is not a GLP weight loss company. They're getting into that space, but it's less than 5% of their revenue. I'm not worried. In mode, just staying patient with this name. Williams consolidation box is still good. We have this falling wedge breakout. We have a green high five indicator. And on the videos, if I didn't say we have a green high five indicator, it's right in front of your face. If it's green, we're good. If it's red, we're not good. And there's none of these trades are red on the high five indicator. If they were, I wouldn't be in them on the weekly. Yeah, just consolidating here. I'm not worried. I'm just gonna be patient with this name. I don't talk about it a lot. Just gonna be patient. Square, another name that I've been calling out that people are getting like crazy over because it's pulling back. Look, guys, inverse head and shoulders. Zoom out. When in doubt, zoom out. Williams consolidation box, good to go. Holding support here, right? Inverse head and shoulders is we already broke out. We broke through and over tested. Now we broke out of that. Now we're coming back to retest this prior resistance that we had here. And we're also, we're just pulling back to this area. So here's the thing, guys. I said 92.95 to 94.12 to 92.26 is the bounce area, is the level that I'm looking at for a bounce. It got to 91.98. It's literally what? We're talking about 20. God, I'm whatever. We're talking about like 20 some cents. 20 some cents I was off right now. And guess what? I don't care. It could pull back down to 89.90. Or let's just say the bottom of this red candle. So let's just call it 88. Our buy box is 88 to 90, 93. This is your buy box. I'm telling you, we broke out. Everything's good. Unless everything goes against us, this is a massive buying opportunity because I believe this name is 108 or it's 100, 108, 110 plus before end of year. End of year. That's very bullish to say, but that's what I believe. If not, I still believe at least it's over $100 before end of year. When in doubt, zoom out. Stop playing these weekly calls and freaking out in the comments because my exact bounce area wasn't right and you played a weekly call up to $100 because I said, yeah, here's the level I think we could bounce at. Like, I'm not playing that. I only played 2 months out options or farther, unless it's sometime like the end of year, like we're in now, and I have massive gains on the year, and I'm playing a little bit of some monthly or 2-month options, less than 2-month options, because if I lose, I have tax loss harvest on those options or on those shares that I lose on. Everybody's different. You got to play your own book, guys. Amazon, nothing different. Massive cup and handle pattern, measured move up to $310. Just hit our first price target at 231. Could get pullbacks along the way, but we have a high five indicator that's green. We created a support on Williams consolidation box. We're going to continue to bounce back and forth in here unless we have a big market crash or something. And we're going to continue up to 310. This name is lagged other Mag 7 names. Shopify, just hanging out in here, a little bit of a pullback, creating turning this resistance right here into support. We're going to bounce higher. We're finally going to hit our 121 price target. We got the 120.72 last time. We're finally going to hit our 121 price target. And then we're going to move up to our measured move of the cup and handle pattern to 160. And then 180 is all-time highs. Williams consolidation box is good to go. Chipotle, just a small little pullback, retesting this previous resistance, turning it into support. Will break out and move up to the $69 price target, and then to our measured move of the symmetrical triangle pattern up to $82. Williams consolidation box is good to go. Launching off a volume shelf. What more could you want? Tesla, man, what a ripper. We were calling this name out way back mid-year. have been investing in this name way longer than that, but mid-year we were calling this name out. 3-year inverse head and shoulders with a 1-year inverse head and shoulders inside the right shoulder. Completely broke out, completely launched for over for 80% higher. Guess what? The funny thing is, the 3-year inverse head and shoulders, the measured move is $581. Williams consolidation box is good. High fives green. No stress, no worries. Pullbacks along the way, guys. Of course, pullbacks along the way, but all that matters, high five indicators green. Williams consolidation box is intact. We're going higher until one of those breaks or goes red. Bought into this name last week. Everything looks good here. Cup and handle on Unity. We had this run up. I sold up here after I bought it. So I brought in on this hammer candle right here. We had this run up. I sold up here as I saw we were running into all this previous resistance. Ran into all this previously once resistance here. So I said, you know what? Also, what I was seeing on the daily, I said, I even made a post about it. Go check it out. I said we're going to have a pullback. I think we pull back down to this buy box of about $26 to about $24, back down here to possibly retest the cup and handle breakout. And that's exactly what we're doing. I bought options and shares, not financial advice, in here. And I think we're going to go higher to 30, then 33 quickly before May 2025. We get to that $33. I think we get there a lot sooner, though, in my honest opinion and what I'm seeing on the charts. Bitcoin. If we break this 104,000, we are going to get to almost 100. My next target, which we already got our first target, called this name back before the presidential election, because we had this massive bull flag breakout, beautiful retest, launch higher, absolutely massive profits on this. We called it all out on this channel. And now we hit our first profit target. I believe we hit our next profit target, 110,000. All we got to do is get over this 104,000. And then, then I think we get up to 110,000 ish. And our measured move of this beautiful big old cup and handle pattern is to 128,298 for this measured move of the bull flag. It's to 109,878. So again, pullbacks along the way. People are freaking out on this pullback. I called it here first. I said Williams consolidation box is good to go. No reason to fret. No reason to worry. We wicked off 3 separate times off this rising trend line arrow, as you see. Wicked off at 3 separate times, and we're continuing higher. Ethereum, they're going to get back to 4,000. Measured move of the bull flag is up to 5,772. They're going to hit 5,000 before then. So on and so forth. Easy peasy, lemon squeezy. Cup and handle on the coin. I like cup and handle on the coin. Cup and handle on the coin, bull flag breakout, measured move of the cup and handle all the way up to $500 and almost $50. And then we have our symmetrical triangle pattern here that we formed. We are retesting that area right now, that breakout area. And then I believe we get back to 335, which we already hit our profit target, 372, 427, and then make our move up to that cup and handle measured move area. Williams consolidation box is still good to go. I've posted many posts about Mara. I'm going after the bread loaf. It is mini micro strategy in my opinion. They have over 40,000 Bitcoin. Michael Saylor this weekend just said that they were going to be the next company to get added into the QQQ, the NASDAQ 100. And that is just massive. That is just massive for someone like him and MicroStrategy that just got added to the NASDAQ 100. And yeah, bull flag breakout. We're getting an over retest, but we're right at the 9 EMA. And yeah, I really like this name, guys. I think we are going to, if we look down at the daily, let's see. Oh, what the hell is going on? It's on weekly. There we go. Nope, that's not right. Where is it at? Whatever. I have a post about it. Basically, on the daily, this falling wedge is getting beyond tight. This spring, this rubber band's pulled back, ready to be just snap forward. And when that happens, we're going to 30, we're going to 30, going to 30, then 36, then 39, very quick. And then that leads us into this cup and handle breakout. And then that cup and handle breakout retest will lead us to 50 and then 65 measured move. This is going to be a parabolic move. Everybody's talking about MicroStrategy. That's awesome. But I'm telling you, you already missed the biggest move. You already missed a huge move on it. Mara is mini MicroStrategy. They have the same playbook in place. MicroStrategy can buy them out for $50 a share. A lot of different things can happen here. I think they're the next big mover. Not going to talk about Crocs or Nike. They're not high five trades. They're just investments for me. I think Crocs, Nike, value stocks, dividend stocks are going to play really well in 2025. Oh my God, 50-minute video. If you made it to the end of this video, you are a trooper. You truly want to learn, understand markets, understand the high five trading strategy. You truly want to become a better become a better trader. You truly want to become a profitable trader. I commend you for making it to the end of this video. So many will click on this video, see that it's 50 some minutes, and they'll click right off of it. If you truly made it to the end of this video and you had on 2x speed, 3x speed, cool, perfect. Love it. Do that with all the videos I listen to. I got things I got to do. You are a trooper. You truly want to become a profitable trader. You truly deserve to be in this game with me, alongside me, and we are going to get there together. Thank you for the support and the love and everything. I truly appreciate everybody that listens to this video. But obviously, if you made it to the end of the video, you're a trooper, you're a beast. I love you. Like you truly deserve to be in this game because you are putting in the work and you are truly trying to understand at a high level how this game works and trying to understand a strategy that's proven itself and to understand just so many different indicators and everything. So thank you again. Comment below what you thought about this video. If you want to see, obviously I'm going to do these every Sunday. Soon they'll only be in the private community, obviously, because I'm going to do it. I gotta make it, worthwhile for the people in there. So comment below what you think, and yeah, I'll catch you in the next one. Have a great Sunday, and I'll see you tomorrow.